Hello, everybody. This is Jeff here from the Systems Lab. Today, I wanted to talk about MicroStrategy. If you have not heard of MicroStrategy before, and some of our subscribers may have heard me talk about this back in, I think it was March. This is a really interesting company. And so it is a publicly traded company on the NASDAQ, as you can see here. It's doubled in value almost so far this year. And it's been public. If I go all time over here, it's been public since about 1998, I believe. And it's been running since around 1989. So it's been around for a while, and it was run for a long time by a guy called Michael Saylor, who you guys may have heard of before. Michael Saylor just here. Basically, it is a software company. It's a business intelligence software company, and a successful one at that. It's been running for quite some time. The thing that makes it different is that on top of being sort of this successful software company that has positive revenue and all of that, um, it also holds an awful lot of Bitcoin. To be specific, it's got a market cap of around 24 billion, and about 14 billion of that, if I'm reading it right, is currently Bitcoin. Now, that makes it basically a proxy for Bitcoin without being a Bitcoin ETF or a spot Bitcoin ETF. Now, why does that matter, or why is that interesting? Partially because spot Bitcoin ETFs aren't available to everybody, at least not yet. So I'm in the UK, I'm in London. And whilst the UK has made spot Bitcoin ETFs, or some of them, in the UK available to some investors, not really retail. Um, Typically, US shares are available to everybody. So it's a potential way of getting Bitcoin exposure without the hassle of some of the spot Bitcoin ETFs and some of the restrictions there. Now, there's obviously caveats to all of that, but it's a really interesting play, and these guys have been acquiring Bitcoin for years in sort of like a value investor sort of way. They've been sort of just buying and buying and buying. Um, and they actually had to sit through for a while their sort of average holding was underwater. But with Bitcoin at the prices that it's at now, it's kind of come good. And and they've been continuing to buy. And what's kind of interesting as well is Michael Saylor's, he's quite active on the web and YouTube and CNBC and all of that sort of stuff. And because of their sort of typical software company status, they are able to get really good interest rates for borrowing. So they've been continuing to buy Bitcoin and borrowing at extremely low rates in order to fund the purchases, like 62 bips at times, right? So really low interest rates, even though rates are currently sort of 5% or five and a quarter. They've been able to get access to these really low rates, and they basically turn around and buy Bitcoin in fairly large amounts. So if you are if you have been a MicroStrategy shareholder over the last year or so, you now the the shares that you own now represent a lot more Bitcoin than they did at the beginning of the year. Let's put it that way. So we're going to look at this a couple different ways. The One of the things that's interesting is that it makes the stock pretty volatile. So if I flick over to this other screen here, this is a comparison. MSTR is the ticker, so that is the blue line here, and that's the active one on the chart. Also on the chart are Bitcoin itself, BTC USD and Bitstamp data, and GBTC, so the spot Bitcoin ETF that we've been tracking for quite a while. And so that's the blue sort of teal color and the orange color, the ones that track really closely these days. But you can see MicroStrategy is kind of all over the map around those numbers. So it goes to different extremes on the downside and on the upside, and the intraday volatility is quite high, as we're going to look at in a minute. Now, if I wind this chart back, you're going to see some of the disparity before, when MicroStrategy really kind of took off earlier this year. But that's okay. Let me just look at this in a slightly different way here. So this is again MicroStrategy, but in bar chart form, so we get to see the intraday range on this really since the beginning of the year, and this little pink dotted line marks when all of the spot Bitcoin ETFs became available as publicly traded things on NASDAQ and NYSE and that sort of thing. So you can see that MicroStrategy did pretty well. And if you look carefully, you can see that the intraday range is increased. Now, there's ways of quantifying that. One way is just to, this is not in range, but this is in volume. You can see that the volume's increased and normalized. But if we wind this way out, we can see that the volumes are bigger than they used to be by probably 1 to 2x. So volumes are now higher. And then if I also have a look at this other metric here, this is a measure of the intraday range of each one of these bars. So the blue shaded area represents how much range was done in that particular day. And then this white line here is the average of the last 30 days. And so you can see the average just increased, and then it's kind of tailed off a little bit, but it's still way higher than it used to be at about 100 and what is it, about $106 versus pre spot Bitcoin ETF release was about $30. So it's about, tripled or a bit more as well. Okay, so what then if what do we care? Why do we care? So, for the systems lab, we've got the PRX strategy, and that's what we tend to focus on. And if I turn the strategy on here, this is on the daily chart, and you can see that we've got a pretty decent return. This is filtered for only since this pink line. So we're only looking at 3 trades, only the trades from this year, only since spot Bitcoin ETFs have been available. And if we just have a quick peek at the numbers here, just so you can see, we are set up for a $100,000 account, and we are risking $1,000 per trade, and we're using zero leverage or one-to-one leverage. So we're not even using any extra leverage, even though there's sort of some leverage inherent inside the MSTR share itself. But the point here really is that from an R point of view, that means that we're up about 14R and change, and the drawdown's been very low, about 1.3, or 1.5, and then the average trade has been about like almost 5R, which is a little bit unbelievable. It's because there's only been 3 trades. We got this one big one, and then a loss here, and then a smaller, decent win here. So if we compare this, where we're up about 14R, to GBTC, which is what we trade and track and teach the PRX system, the swing-based system on. This is also done very well, but in our terms, it's about 6.5 versus sort of 14. So we're already seeing a bit of a disparity. Now, if I go back to MSTR and then have a look at some of the lower time frames on this, then that becomes interesting as well. So if I look at, say, a 16-minute chart, then we've got there's no filters on this at all. So this is still pretty good. This is about 22R so far this year, with about a 4R drawdown. So pretty good, and about a 0.8 average trade, so about a 0.8 expectancy. So, that's also looking pretty good and has enhanced those returns a bit. If we drop a bit lower to say like a 30-minute chart, also looking pretty good. It's the net profit's a little bit lower. We've got more trades, therefore the average is a bit lower, but the numbers are all looking good, and the drawdowns are looking healthy. Now, if we go really short term, down to say 5-minute, then you can see also this is just performed quite well as well. This is doubled basically since the 11th of January. So in 6 months' time, that's 102R. That may be even bigger if you were sizing it as a proper percentage of account. And that's with a max drawdown of about, they called it was 8% at the time, 15R. Not so bad compared to the 102 that you've managed to collect, and about of a 0.3 expectancy on that. Expectancy tends to decline as we get to the lower time frames, but we get more trades in, so the opportunities are higher. So expectunity is higher, if you guys are familiar with that term. Okay, now what if we should be a little bit more careful sometimes. So we The first thing actually I want to show is if we turn on the moving average filter here, we're going to get rid of a bunch of trades. Um, and we trim that net profit down a little bit. I think it went from about 102 to 85 here, but the average trade goes up. So that expectancy jumps to about a 0.5, which is kind of cool to see. So, sometimes the moving average filter is your friend. I'm going to turn it back off for a second though, because I wanted to demonstrate something else. In here, we've got some of these big sort of big up days, like big up chunks. And that's going to be partially due to holding some of these trades overnight or even over the weekend, which we might not want to do. So if we wanted to exit at the end of the day and avoid those overnight holds, we lose most of those sort of jumpy big trades. A couple of them exist, but that's because it's happened during the day, which is great. Our average trade is about a 0.2 in that case and a 68R. So numbers have dropped down a little bit, but it's a pretty smooth outline, and the max drawdowns are pretty consistent and pretty reasonable. So really, that's what I wanted to cover today, guys. Something else to check out and pay attention to, and happens to work pretty well on PRX. So it's another opportunity, another instrument that we can apply the PRX strategy to. So if you guys are already using it, then that's something else you can just start using straight away, or start investigating and back testing using the tools that we are here and make available to everyone. If you're not using it yet, then please come and check it out, and it can be applied just like any of the other strategies that we teach in the home study courses. Okay, guys, that's all from me. Have a great rest of the week. Cheers.